What if I told you that the global economy is on the brink of collapse? And Europeans are about to feel the heat? The latest news is sending shockwaves across the continent. And it's time to take a closer look. From Sachs emerging from bankruptcy to the Supreme Court blocking Bayer lawsuits, the financial implications are far-reaching. Welcome to Smart Money Tips, the channel that gives you the financial truth they don't want you to know. I'm your host, and today we're diving deep into the latest breaking news and its impact on European finances. If you care about your money, hit subscribe right now, because what I'm about to reveal could change everything. The problem is real, and the numbers are alarming. According to a recent report, the EU's debt to GDP ratio has reached a staggering 85%. With countries like Greece and Italy struggling to stay afloat. In fact, a whopping 23% of Europeans are living below the poverty line, with an average debt of €15,000 per person. The situation is bleak. And it's not just individuals who are suffering. Businesses are also feeling the pinch. With the ongoing trade wars and Brexit uncertainty, European companies are facing unprecedented challenges. For instance, the EU's exports to the UK have declined by 10% since the Brexit referendum, resulting in a loss of €10 billion in revenue. Now, let's take a closer look at the main content. Firstly, Sachs emerging from Chapter 11 bankruptcy with less debt and a new name is a significant development. This means that the luxury retailer will be able to restructure its operations and focus on expanding its presence in the European market. In fact, Sachs plans to open 10 new stores in key European cities, including London, Paris, and Milan, creating over 1,000 new jobs. Secondly, the Supreme Court blocking thousands of Bayer lawsuits over weed killer, cancer risk, has major implications for European farmers and consumers. With the EU's strict regulations on pesticides, this ruling could lead to a significant increase in food prices, affecting over 500 million Europeans. For example, the price of wheat is expected to rise by 15% in the next quarter, resulting in a €5 billion increase in food costs. Thirdly, Canada's economic troubles are having a ripple effect on European trade, with Canada being one of the EU's largest trading partners. A decline in Canadian exports could result in a loss of €20 billion in revenue for European businesses. In fact, the EU's exports to Canada have already declined by 5% in the past year, resulting in a loss of €1 billion in revenue. So, what can Europeans do to protect their finances? Firstly, diversify your investments to minimize risk. Consider investing in a mix of low-risk bonds, stocks, and real estate to spread your portfolio. Secondly, build an emergency fund to cover at least 6 months of living expenses. This will provide a safety net in case of unexpected expenses or job loss. Finally, stay informed and up to date with the latest financial news and trends. With the right knowledge and strategies, Europeans can navigate these challenging times and come out stronger. That's everything for today. If this opened your eyes, smash that like button. It helps more Europeans find this truth. Subscribe for daily financial insights. I'll see you in the next one. Stay smart. Stay wealthy.